Hi, I want to show you how a major indicator can confuse you.
Wait. Sorry to interrupt the intro, but have you ever been wounded by the markets or looked at the screens with dread? See what I did there with that clip at the beginning? Brilliant film, by the way. If so, at the end of the video, please take a moment to look in the description below. There's some links that can genuinely help you, and also details of the Scruffy squad. It's direct access to myself on a daily basis, and I teach the guys exactly what I do and hopefully guide through the choppy waters of trading. So if that sounds good, please check it out and enjoy the video.
Hi, and a warm welcome to one and all. And for those of you who haven't seen me before, my name is Langers, and I am the Scruffy Trade. And what I'm trying to do is kind of inspire you with your own trades, show you a little bit about what I get up during the day, and maybe teach you a thing or two about the markets. So if that sounds good, please share the videos, click the little subscribe button, genuinely helps, and we'll have a chat. So what do I mean by an indicator confusing you? Well, if you look at the market in general, there's a big perception that it's easy money and you're going to be in and out of it all the time. And all you need is that one indicator, that magic key that'll let you into the 5% club. But is it really that simple? No, it's not. You know, you can watch as many videos like this.
You ding dong!
Give it to me again.
You ding dong!
And they'll tell you it's quick money and that they have the secret ingredient by just altering the settings slightly. It doesn't quite work like that. I often alter settings on some of the indicators I use, and I predominantly use an RSI. I like an RSI, but it's not my trigger. It's a guide, and I will slow it down and sometimes I speed it up. And it just depends on what I'm looking at the moment. There is only one indicator that is king, and it's price itself. And if you can read the price, then you're on your way to success. But what I'm going to do today is, apart from having a look at, looking at things, I look at this all the time, you know, because I have this fantasy. And she's having none of it. Go on. I know it's a running joke and we've had it for months, but if I get you on holiday, would you wear that?
I'll wear a bikini, not a board one.
Why not?
Who wears a board bikini?
Actually, my finger was in the wrong place there, wasn't it? Not allowed to do that anymore, anything. All the good films are getting destroyed now by this PC brigade. Bloody terrible. Sick of it. Sorry. This is, by the way, a working office. And when I make these videos, it is done while I'm at my desk and here at Winky's business. They are never scripted, ever. It literally is camera on, see something that's in my mind or a question that's being asked from the Scruffy squad, and I'll fire the camera. And that's it. That's why I'm not into sort of the glossy lights and everything. I'm not exactly Steven Spielberg. So, sorry for the interlude. I'll have my coffee, because we all know Scruffy likes a coffee. Definitely does. Likes Winky as well.
Is that right?
I do. I think the world of you. So let's have a look at these charts. So what are we essentially looking at, and how can you be confused? I'm going to show you. Whenever you're looking to place a trade, and it doesn't matter what trade you do a top-down analysis. Look at the price before you look at anything else. Now in here, you can see a drive up, It's failed the top and it's worked its way down. It's bounced on a level, it's come away and it's come back down. Now, the levels that I've put in are midpoint levels. This is a midpoint. These ones are based on a daily, which is this one here. And I'm now going to drop it down through the time frames so I can see the makeup of the price and how it's reacting to these levels. Simple stuff. So let me show you. So the daily at the moment, strong drive down, and we're trading below this midpoint. Okay. So I now have to see whether or not it's going to try and bust through this lot and work its way back to that midpoint, or whether it's going to stay below it. Okay. Now at the moment, all I'm doing is painting myself a picture. You know, I just want to see where the price is and what's happening. At the moment, it's telling me we're on a downside because we are below this midpoint and we are below the levels from yesterday. Okay, so it's a downside proposition at the moment. Take it to the 4 hour. And what are we seeing here? Well, there's your drive. Okay, there's your midpoint. You can see how that midpoint is being respected on the 4 hour. That is the last major leg that you can see to the downside, which is here. So there's the bottom, and then it's pushed up and it failed to come back. Again, giving you another clue, we're going to be to the downside. Okay. Pushed down, pushed up, it's failed to break, it's pushed down, but it's staying above this midpoint. Now bear in mind this midpoint was drawn from yesterday. So that's giving you an idea that this is going to be a key reaction area. Why is that? Bounce, 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 and when it's broke through, it's come back to it. So this is a key reaction area. All right. So we know that when the price is in and around here, it's going to be a good time to enter the market, whether you are going long or short. And at the moment, we are still trading below this, and we're now trading below this. So I'm still to the downside. I'm going to look at the hourly. What's happening now? Well, push down. There's all of the catches that we saw prior on the 4 hours. See, it's pushed, but it's pushed through. It's gone up. There it is there. And it's rejected that level. So if I now put on an indicator, and I'm going to put on the MACD. The MACD, because the way that this is read normally is if the price is below the histogram, you would enter long on the cross, which is here. So that's telling you to go long, and it's telling you to stay long, and it would have been right at that point, but it's still telling you to the long side, and this is as well, and you can see that. However, the price is telling you to the downside. Move it to a 15-minute, and there we go. There's your clear rejection. There it is there. It's coming into a good area here. This up here is now curling over the other side. So it's actually conflicting from the hour. And if I drop it down to the 5-minute, it's actually telling you to go short. So the MACD is actually conflicting on the time frames. So how do you use it? Well, you just use it as an entry point. And the entry point is there. And I'm going to prove that by dropping an order in right now for 5 pips. Just like so. So that there is 5 pips, which, funny enough, is bang on to that level. We're going to put another one in, same place, for 10 pips, which is here. And then I'm going to put another one in at the same place for 15 pips. Just like so. Right, so we've got 3 orders in. I can do a bit of Scruffy madness on this. If you look at some other videos, you'll see that. And Scruffy madness is just a way of scaling. But what we've been looking at, now this is in, if I take this back to the hour, is the price has told me this is a rejection. All right, the whole process is telling me it's to the downside. But the MACD here is telling me to go long. All right. So do I agree with this or do I agree with the price? Well, after being in the industry and as you see me trade most days, I will go with levels in a price every single time. The MACD is good and it can be used, but can it be used as an overall barometer of direction and price? No, it can't. There isn't one indicator that can do that. But what they can do is they can guide you into how you will carry out your trade. Now, what I'm doing with it at the moment is I'm actually just using it as a bias trigger. And what's a bias trigger? Well, I have made my bias based on levels and the price itself. Have I looked at this? Not at all. But if I look at it here, it's telling me to go long, but as we can see, the price is going short. If I take it to a 15-minute, it's kind of telling you a different story altogether, you know, because this is starting to converge. So it's starting to say it's going short. Take it on to a 5-minute, and this would be the confirmation bias trigger. In other words, I want to go short based on this level here that I put in. And the trigger is there. That is there. A little bit late to the party, but that is there. It's showing what is going on. So all I've used the MACD for is just to confirm and fine tune an entry point. Now, if I'd seen this a little bit early before I started speaking to you guys, I'd have been putting my orders in around here. But my theory is sound, and because when I am looking to trade, I'm not looking for a trade to be 5 minutes. I'm looking for a trade to last maybe an hour to a couple of hours. So if I'm out by, in this case, 5 pips, it's not the end of the world. You know, I can just sit and let it play out. So that's it. So what I'll do is I'll let this trade, oh, I didn't see, I'll move that over. There's the area where it would have got in. Didn't notice my big bobbly head on there. But as you can see, we're a little bit late to the party, but it's still confirming. It's still telling us it's going to the downside. So that's what I mean by confusion. Your hourly and your shorter time frames were telling you 2 different things. So you have to use the tool in the right way. Okay. Can you use the MACD to give you the direction? No. But you can use it to fine tune your entry. So like I say, I'll let this play out and I'll come back to you at the end and we'll see if I'm right. Okay guys, I'm now going to close this off. If you bear with me. There we go. And why have I done that? Well, it's because not only am I using the MACD as a confirmation bias, I'm actually also using it as an exit. And on this, it had crossed, as you can see there on the histogram and here. And the price was moving up. It's pretty close to where I have my stop. I could have done one of two things. I could have just let it gone up and hit the stop, or I can use this to get out. And that's what I've done. I've just used that to get out. And it's as simple as that. Trading's not as difficult as you think. It's just a case of putting a few rules together and sticking with them. But the basis of this video was to show you how sometimes an indicator can fake you out. And that is exactly what was happening with the MACD. So you just use it in a different way. And instead of using it for an overall trend and entry, I just used it as an entry point. And because I used it as my entry point, it was just part of the rules of the MACD that I also use it for the exit point. Because if this continues on its trajectory up here, it would have hit the stop. And that's that, guys. Nice and easy. So I hope that kind of helps. I'll do more of this with different indicators if you so wish. Give you an idea of how they work, but ultimately the price and levels will be king. And it's just understanding how to read the chart throughout. Okay, so if you're stuck, by all means contact me. My contact details, etc. are down in the description. There's some decent links in there as well that can probably help you out. And as always, do what you love and the money will follow. See you all in the next one.